Good afternoon, everyone. In today's video, we're going to spend some time answering one very simple question, which is how effective were the stock volatility box ranges today in the morning sell-off that we saw on July 6, 2021. Now, in case you're tuning in the future, this is what today's market action looked like in the S&P 500. To start off the morning here, all the way up till 9:30 a.m. Pacific, we had a sell-off, a bit of chopping around sideways, and then after that point, we had a bounce. And our question that we're going to answer in today's video is along this entire journey here, where did we have opportunities to try and use our stock volatility box live scanner to catch long opportunities to try and play in any of these reversals, along with short opportunities to try and play exhaustion in trends. Now, the way we're going to look at this is really in three different splices for all of the trades that we had today that met our two rules. I'll talk about that in just a second, but first the three splices. First is going to be by strategy type, which is what you're seeing right here. Next, we'll take a look at the data by time and trade, and then finally, we'll take a look at the data divided by volume or broken down by volume, and that's going to be the average daily volume. Then after that, I'll list all of the different trade opportunities, and we're going to pick 7 of them and then go to charts and cycle through that a little quicker to put 2 and 2 together. Now, starting off here first with our trade table for our strategy type, I think this is a good point to involve the two different filters that I use for all of the trades that are counted as part of this 168 number. The first is they need to have been on our live scanner for at least 3+ minutes. That means we have enough time as human beings to really take a look at the live scanner, go to our charts, and then do something about it in terms of trade execution. So that's step one, making it a more realistic display of, I think, the trades you could catch. And then the second is we're looking at trades only between 6 to 10 a.m. Pacific as the hour. So no trades after 10 a.m. Pacific. And the whole idea there is really to give us enough time for any sort of follow through on this trade, since we are looking for a fade of the direction in which price action is going. So using those two filters, today we had a grand total of 168 trades, and you'll see a good chunk of them were in our aggressive long entries. There we had 121 trade opportunities using just a raw model, so no edge signal confirmation, no overbought oversold confirmation, just looking to play the clouds, a 57.85% win rate with a net P&L of $6.50 using a one share basis. As long as this number is above 0, that's really what we're looking for. So $6.50 is a very easy check mark here, and especially over 121 trades. So that was the aggressive longs. Aggressive shorts today, really the best strategy type, if you will. Aggressive shorts, 11 trades, 72.73% win rate, and a net P&L of 13.86. So twice that really of aggressive longs, and it took drastically less trades to get there. Now moving down the line off of our conservative volatility box models now, the conservative longs, 34 total trades, 64.71% win rate, net P&L here, $3.37. So again, a good check mark. And finally, the one strategy type that did not work effectively today, 2 trades, so only 2 trades there, but 1 out of 2 was a winner. The other was a loser. Net P&L here was negative 19 cents. So total for the day here, 23.54 across all 168 trades for a net average win rate of 61.32%. So I would call that a win for today, at least in terms of trying to capture the sell-off. Now let's keep moving forward in terms of taking a look at this, but in terms of time and trade. And here again, we see a very repeating theme that we saw the last time we did this exercise, and that's this 5 to 15 minute chunk is really the sweet spot in terms of the time and trade that it takes for an average winner. There you'll see 5 to 15 minutes at the highest P&L, $11.76. Today, what was interesting is as your time in trade increased, that's really where you started to see P&L. So your next average one, 15 to 30 minutes, then 30 to 60 minutes, then 60 plus minutes was 121, so still positive, and then even under 5 minutes, positive, but that was your least successful time in trade if you were to look at this in terms of that as a breakdown. Now, finally, let's move on to taking a look at this using volume. And using volume here, the 1 to 5 million in terms of average daily volume was a sweet spot. Net P&L there, 22.42. The 2 or 3 other volume chunks, 5 million to 10 million, $2.47 is still positive. 10 million to 20 million, that was negative $1.40. And then 20 million to 30 million, 5 cents positive. Shouldn't be a lot of symbols that really fall inside of this. Now let's move on to taking a look at all of the trades here. So for all of our Stock Volatility Box members, here's that list. We're going to focus in on 7, and these are 7 of the names that I think are either interesting from a chart perspective or just larger names that I think people care about. And so these are 7 examples. We'll focus in on Amazon, the Dow Jones ETF, which I think layering this side by side with the futures volatility box will also be interesting. Then we'll take a look at Ally, American Express, the oil and gas ETF, Honeywell, and Disney. So now let's dive into charts, starting off first with Amazon, which I think was the one where we saw the strongest trend, at least in a bullish direction. So to start off in Amazon here, unlike the broader market, in Amazon, as price action was falling from really the beginning till 9:30 a.m. Pacific, price action in Amazon was actually rallying. Now, the first time Amazon hit our live scanner was right here. We had price action breach our volatility box clouds. We also had the edge signal, but we never really had a proper retest prior to going and hitting our target, which is this gray target line. So here we hit the T1, but never had an opportunity for a fill. Now we're on the look again, looking to try and capture this time a reversal off of our conservative box. You'll notice here in Amazon, price action comes back to the market pulse. This time we break above, tag the conservative target line, which would be our long target if you were in a long trade. Then we pull back from there, pull back quite a bit before again price action rallies, this time breaking into our conservative volatility box clouds. And we don't see our overbought confirmation anywhere inside of the clouds before Amazon just rips higher. So the only one trade here that triggered was off of our aggressive entries, and this is one of the 11 aggressive shorts where price action breached our volatility box edges and we hit our target line. And looking at this both in just plain English here, this was fading all of the stocks that are strong and rallying while the overall broader market is really selling off, and that too fairly steeply for, say, the S&P 500. So this is Amazon here as a recap. Now next, let's move on to the Dow Jones ETF. And I think the Dow Jones ETF here is a very interesting example of what the live scanner shows as a loser versus what you as a human may have stayed through, especially looking at this as, say, the broader ETF. Now, in the Dow ETF, we had price action breach our volatility box clouds. We were looking for an edge signal confirmation. And here, we went outside of the clouds prior to actually seeing that edge signal confirmation. Now, depending on your trade plan and how comfortable you are in terms of buying ETFs, but for anyone who has any sort of plan that includes adding to index funds, we don't see DIA or any of the index ETFs rather hit our volatility box zones often. And this is where the idea of looking at this as a swing trade comes in, where really these are places to try and scale into your trade. So the aggressive cloud is the first zone. If it falls to the conservative cloud, fantastic. That gives you a better opportunity to try and get in. In this case, you had just the aggressive clouds trigger. And from the point in which we had the edge signal confirmation, we then came right back. We went outside of the clouds one more time. And this is where having that flexibility, knowing that this is an index fund, you don't mind staying in for a longer time, gives you the flexibility to withstand this commotion right here in which price action goes outside of the ticks. If you remember on the table, this is counted as a loss since we technically did go outside of the clouds, but this should give you an idea of what the flexibility looks like had you given that and even been willing to buy some more down towards the conservative volatility box. Either way here, the Dow from that cloud period where we had the chop, you'll notice really bounced into the close where had you even entered at the beginning of the clouds, the Dow gave you a max of 0.6%, really the absolute low for the bottom for the Dow, trying to catch a potential reversal. The SPY also had ETFs, just as an example, that hit our volatility box live scanner. DIA, I think, is just the most recognizable ETF from that bunch. So that's DIA. Now, next up, let's move on to Honeywell. Now, inside of Honeywell here, this is a bit more of a picture-perfect trade example, if you will. Honeywell, straightforward, hit our live scanner when price action breaches our clouds. We have the edge signal confirmation come in. We have price action retest our clouds prior to hitting the cyan line. And really from that point, price action hits T1, stop is moved up to break even, never gets close to retesting, and your second batch of shares towards the close was up 1.08% from the actual entry price, and our T1 was much smaller, 0.25%, right around 55 cents. So that gives you an idea of being able to play stretch targets. And that's why I thought Honeywell here was a good example. This is about as picture perfect of a trade as we could hope for. Really, the only thing that would have made this even better is if price action here had hit our gray target line as part of that bounce, really giving us what I think would have been your ideal trade scenario for a home run sort of trade as a day trade. Now, next up, let's move on to American Express here. American Express, we had price action hit our aggressive clouds, so we had aggressive hit the live scanner right here. Price action then hit T1 almost right away, so no opportunity to try and capture that. It's the conservative box that I thought was a bit more interesting here, where price action fell inside of the conservative. This time chopped around, waited for the edge signal. That finally came in. You had an opportunity to enter. We stayed well inside of our cloud, so a good amount of chopper out sideways, and that led to a beautiful reversal in American Express. So another example of using the volatility box, the edge signal confirmation together as a combination to try and catch some of these nice reversals. T1 here in American Express, 0.17%, but in terms of where we closed for the remaining batch of shares, 0.88% in American Express, really into the close. And that too, you could have a break-even stop if you are looking to try and play this for a longer-term swing trade. Now, next up, we have our oil and gas ETF, XOP. XOP here, we had price action breach our volatility box clouds. We had the edge signal, and we fell just a little short of our retest here. And so this is an example of really just a missed trade. The retest here is not valid per our trade plans. Really, after we hit T1, our next trade that we're looking for then is our conservative volatility box as an entry, really looking for this break outside of the clouds. We like the volatility, we're welcoming the volatility, and we're really hoping for more volatility here, especially if you missed that first trade. So that's XOP. This is an example of really, I think, a missed trade, which hit T1, reversed. We were looking for the conservative box here, just never really breached there. Now, after XOP here, we can move on to Ally. Inside of Ally here, we had price action hit our volatility box clouds. This is when we had price action hit on the live scanner. We were looking for the edge signal confirmation. You had 1, 2, 3 arrows, but really in that time period, you hit T1 as well. If you did capture any of these retests thinking it was valid, you had your T1 hit one more time, but not a whole lot of follow through in Ally into the close here. From our entry all the way up till, say, the close, 0.67%. So an example of a trade that didn't really pay you much, but didn't also cost you in terms of giving you a loser. So a whole lot of nothing, but still a small winner in Ally. And then finally, we have Disney as our final symbol. In Disney here, similar example, price action bounces inside of our volatility box clouds. We hit the live scanner. For all of you that had Disney in your watch list as notifications, this is when you receive the notification. You have the edge signal confirmation. We have an entry at the clouds or better, and this is just a nice steady grind up higher. The market pulse starts to go from red to green. The trend switches. We've been able to capture really the bottom of this trend exhausting, and we hit T1 almost right away. Very little heat on the trade. Stop has moved up to break even. Continue to grind up higher, and really into the close there, up at 173.64 from an entry of 172.34. Gain of 0.74% or $1.28. All right, so I hope you found this video to be useful, both from looking at this first on a data breakdown using 3 different lenses. We looked at it through strategy type, time and trade, along with volume, and then coming into charts and really getting a visual representation of what do these trades look like, what are we actually looking for in terms of signals, what does time and trade actually look like in terms of T1 and that very quick move to the gray target line, how do you manage the trade after that. Hopefully today's 7 different examples gives you an idea of really a lot of different scenarios there, along with places where you may be willing to give more flexibility to your trades, places like, say, buying the index fund ETFs, like the Dow Jones ETF in today's example. All right, take care, everyone. Good luck trading, and we'll see you in the next update.